is Felix Ortiz Rivera. I am the owner of Fidel's Lending LLC. It's a mortgage brokerage license here in the state of Florida. And today is the June the 1st of 2024. I'm really excited about telling you a new loan that we just received from the wholesaling banks, mortgage banks, and it's a conventional loan from their affordable program, and they're 0% down. So I wanted to let you guys know about this. I'm really excited about it. It's a really good deal. It's not a down payment assistance program, so there is a benefit to this one uh, versus some other programs out there that are down payment assistant with the county. This is all done here. It's a 0% down payment, meaning that the loan it's 100%. All you're gonna be paying is your closing cost. So yeah, let's move into explaining. There are two programs that the conventional loan has. Okay, so I made this little table to make it a lot easier to explain the two products. It's pretty simple. These are two conventional products from Freddie Mac. Um, they're called Home Possible and Home One. And how do you qualify for one or the other? Pretty simple. For the Home Possible, it's income based, and I will explain a little more on that. And the Home One is not income based. The Home Possible it's doesn't need to be a first time home buyer to be able to use the Home Possible. For the Home One, you do need to be first time home buyer. For the Possible one, you only need a 620 and above. And for the Home One, you need a 700 and above to qualify. So what is income based? Income based, it's basically the property that you're looking for. You put that address on the Freddie Mac tool. It will tell you what the 80% of that medium income is in for that area. And that's what you're going to use for your income. Let's say for that area, it's $72,000 is what usually the 80% medium income is. Well, you divide that by 12 months, and that's going to give you a $6,000 worth of income. So what that means is for your income based loan right here, you're not going to be able to use this if you are making more than $6,000 a month for the how many borrowers are on the loan for the properties. So what that means is it's for the household income being used on the loan. So if there's two borrowers and you make more than $6,000, then you can use the income-based loan. So, but you can always use the non-income-based loan. You just need to be a first-time home buyer, and for being a first-time home buyer, all you need to be is that you haven't had a property in the last 3 years. Basically, you've been renting for the past 3 years, and you would need a credit score of 700 and above for this one. Okay, so that's basically the difference. I think this is a really good opportunity for the borrowers or any client that is trying to purchase a home right now, and he's either a first time home buyer, or they have an income of less than 80% of the medium, which is running around for the Orlando area or the Orlando area about $72,000 a year. So if you're making around more in this example, it's not always going to be the same. But if it's you're making around $6,000 and above for the application or for that property, if you're just one person or two-person, but you're make if for it's above the $72,000 mark a year or the $6,000 a month a year, you would not qualify for the income-based one. So that's all you have to look at. I mean, I just had somebody that didn't qualify because it made too much money on the home possible because income based, but she was a first time home buyer, and she does make above, and she, I mean, I'm sorry, her credit score is above 700. So in that case, she can use the home one for the 100% finance, or what we're talking about, which is 0% down payment. It's the same thing, and all you would have to pay is your closing costs on the loan. Okay, so thank you very much. I'm glad you I got this information out there. A lot of people are interested in it. You can call me or text me at this at my number, and you can also either send me an email at my at, at my fidelis lending at gmail.com email. Okay, thank you again, guys. Bye bye.